Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He talks about the meltdown of the meme stocks, crypto, and renewables through the year, and the possibility of a Santa Claus rally. Inside Track Trading President Eric Hadik comments on the cycles affecting stock markets, interest rates, wars, and cryptos versus the dot-com bust. Publisher of the VRTrader.com newsletters, Mark Leibovit, chats about what investments could be hot in the new year and what has been holding back economic success this year. Mark also has a special offer for our listeners. Plus, at the end of the show, we'll have a company showcase update from RecycLiCo CEO Zarko Meseldzija. We'll talk to Ross Clark right after this.
Introducing RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMY.ZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find Ross on Twitter at ChartsByRoss. Welcome back to This Week in Money.
Good to be with you, Jim.
Ross, how did the year turn out for all those meme stocks and crypto traders?
Well, they got off to a great start back in January, February, but anybody who got caught up in all that enthusiasm, they're just seeing a slow erosion here. This is just, I've seen a number of the venture stocks over the years, like the VSE stuff, that get bid up with all the hype, and then you watch them erode away. They get these short-lived rallies on the way down. Everybody thinks that things are coming back to life. But guess what? The rallies are short-lived, and then you start to erode away again, and you can't find any bids to sell into. And, here we are. You've got the big names. If you take a look at, the cryptos, you've got names like Coinbase making new lows on the year at this point. You go into the renewables, where everybody, let's get into the new era here for energy. Gosh, these renewable stocks are just slowly eroding away, and most of them are down, at least off the highs that we saw earlier in the year. The Reddit people, got all excited on AMY.V, etc. You got to learn here that when you got new items out there that everybody's excited about, or the sentiment just goes through the roof on something, it's best off to take money off the table and don't overstay your welcome.
Both times at birthday parties of mine, people are going, "Do you have your crypto yet?" Within a day or two, it collapsed.
Yeah, well, I know your birthday is right around Christmas, and, that's classic in terms of what are people talking about at the Christmas parties, and more times than not. The one that everybody's so excited about that they're doing so well with, you look back at that 6 months later, and there you go, whoops. So, and you look at this week, look at the choppiness in here. The S&P and the Dow had a really good start to the week. They made new highs, new monthly highs. But what you've got is some expanding patterns here, expanding triangle patterns. We call it an RPW, a reverse point wave. So you get you create one high, you sell off, you get a secondary high that's higher, you sell off to a lower low, you do it a third time, which happened the middle of this week, and then you break the supporting low. And so what you've got is a really nice distribution pattern. And if we look at the Dow and the S&P, it's exactly what's happened. So for the Santa Claus rally, which usually starts from an oversold low, may have a chance to get a bounce towards the end of the year, just because we're selling off enough right now to get that oversold level. But I wouldn't be too excited on things over there right now.
What's happening with the U.S. and Canadian dollars?
We are, the U.S. dollar has been biding its time, sitting around that 38% retracement level that from the rally at the beginning of 2021. Good oversold ratings on the weeklies for 3 weeks in a row now, and we've got sequential buy signals on the weekly chart. We're sitting at the 20 or the 50-week moving average, and the pattern set up here for the dollar index is one that I'd expect a decent rally over the next 2 months. Probably retrace about a quarter to a third of the decline from the high. But that's, I think the big swings are sort of behind us on that dollar. I mean, it was up at 115, then down to 103, and we're 104.80 right now. So you're probably looking at something in that maybe 107 to 108 on the bounce. And, if we look over to the Canadian dollar, it's got a lot of overhead resistance. As we mentioned in the last couple of weeks there, the ice level where it broke down from at 75.5, we bounced back to that one, 3 weeks ago, couldn't do much with it. And in this last week when the oil bounced back a little bit, oil rallied back up to 77 this week, Canadian dollar just couldn't do anything and closed off the week at the bottom end of the range, just under 73. So erosion, I think, is sort of the name of the game here for the Canadian dollar.
What's going on with gold?
The gold market, so gold and silver both got up into decent overbought conditions here a couple of weeks ago. We're starting to see a nice correction. There's a big base pattern when we go back and look at gold over the last couple of years here. And the resistance level has been tested in this last month. The base looks reasonable, but what we need to see here is that the corrections hold at or above 17.6 on the gold bullion. The pattern it's a great pattern. It's got lots of potential within it. But if the dollar index is going to bounce back the way I think it is, the gold's probably going to bide its time for a little while before it has the opportunity to break out. But I think accumulation, maybe if it gets back down towards the under 1770, you might take a look at gold and the miners if we get down in there. Likewise in the silver market, probably looking at a decent correction there as well.
Ross, thank you so much for the update.
It was a pleasure, Jim.
My guest has been Ross Clark from ChartsandMarkets.com. Find him on Twitter at ChartsByRoss. Coming up, Eric Hadik next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Eric Hadik, CEO and President of InsideTrackTrading.com. He's speaking to us from Central California. Welcome back to the show.
Well, thanks for having me back, Jim.
How are things at Inside Track, and how can people subscribe?
Well, things are going pretty well, especially after this move in the Dow right up to the upside targets we've been talking about for the last 2 months. And if people want to find out more and also view our different subscription options, they can find our information at InsideTrackTrading.com. That's inside with the extra I in the middle, INSIIDE, TrackTrading.com.
Does the Dow look like it could have started a new bull market?
Well, I guess a lot of that would be determined by how you define a new bull market. I think that, since late September, I was explaining to my readers why and how the Dow in particular should see a strong surge into early December, get back up to its late August highs, and reach just a myriad of upside targets grouped between 34,200 and 34,600 in the Dow Industrials. They just fulfilled that, set their highest daily close on November 30th, just below 34,600, and just spiked slightly above that on the 13th. At the same time, a lot of indexes triggered some negative signals on the 13th, and that is expected to trigger a decent sell-off. But the Dow has given some indications that the late September, early October low should hold through year end and potentially through part of first quarter in 2023. However, a contrasting index like the Nasdaq 100 has been showing just the opposite. It failed to turn its weekly trend up on the recent December 9th weekly close. And that, along with these short-term topping signals on the 13th, the combination of both those things reinforces that a new sell-off is imminent, and that ultimately, probably by or in first quarter of, in fact, January of 2023, the Nasdaq 100 could retest and or spike below its fourth quarter lows.
Could stock markets continue to head higher into 2024?
I think that I am expecting a future pretty significant top in 2024, but that doesn't signify, and there's not a lot of corroborating information to say that the low of this prevailing downtrend has been set. Since late 2021, I talked about major cycles topping in early 2022, and that's likely setting a multi-year top. And at the same time, that coincided with what I called a 7-year cycle of stock crashes that timed it was usually a 2-year period from the peak to the bottom, even though that might only be a few months from one year into the next. But every 7 years, we've had this kind of sell-off, and the corresponding low of that sell-off, linked to previous ones in 2002, 2009, 2016, was showing that we should see a bottom in 2023. So I think that is still future. I think we still have more downside before that bottom is set. But from there, I do think we're going to see a pretty strong rally into 2024. And that's when a more intriguing, long-term cycle comes into play. I've discussed this particular cycle for the last 25 years, and it was really one of the governing cycles that had me forecasting a major stock crash in 2007, 2008. But it is a 17-year cycle that has, and it's 2 times multiple of a 34-year cycle, even more accurately, has timed major stock tops and sell-offs. And it has often coincided with Middle East conflicts. And both of those things are on my radar and on the horizon over the next couple years. But if you look back at when I was anticipating the 2007 peak, that was 17 years from 1990, Persian Gulf War, Iraq invasion of Kuwait, and a sharp sell-off in the stock market, which was 17 years from 1973, what turned out to be a 2-year 50% drop in the Dow. At the same time, the Yom Kippur War took hold, which was 17 years from 1956 when you had the Suez Crisis, which was 17 years from 1939. So it just flows back, and particularly the stock sell-offs go back into the 1800s, and that comes back into play in 2024. But the interesting part about that, and the reason I even kind of touch on that a bit, is that just earlier this week, there was a very interesting article and conclusion published on a website I follow called Space Weather. Helps kind of keep you up to date on solar storms, sunspot cycles, when there are MC and X-class flares coming off the sun, which actually the sun's just started to kick back up in the last day or two. But they had this article talking about the conclusion of some scientists that they're now convinced that not only do you have the widely accepted 11.2-year cycle in solar storms and sunspots, but there's what they call the ESC, the extended solar cycle, which they pinpointed to 17 years, a 17-year cycle. And as I said, I've been writing about this for 25 years, that I believe there is a very strong 17-year cycle that is tied into geo-solar interaction. Part of this is derived from a scientific paper from a couple decades ago. I think the individual writing it, his name was David Juncker, and he talked about this 17-year cycle of to and away magnetivity between the Earth and the Sun, and I was showing and detailing how that had this impact on the markets, on conflict, particularly in the Middle East, and now there's more scientists finally concluding that, oh yes, this is a valid cycle.
Is the U.S. dollar cycle in an uptrend or downtrend?
The U.S. dollar is in the final stages of a 2 to 3 year uptrend and a 10 to 15 year uptrend from its major bottom basis, the dollar index, back in 2008. In early 2021, I explained to my readers and in some of our podcast discussions how the dollar was on track for a new surge that should go up to new multi-year highs and last into the first half of 2023. I believe that still is the case, but as part of that, the dollar recently reached major upside price target, so it has fulfilled most of the price objective for this whole multi-year uptrend, and that ushered in what I thought would be a 2 to 3 month correction before it tries to mount a final rally in the first quarter of next year. But I think that the dollar will be coming into a major top at that time, and I think there are some pretty serious ramifications and repercussions of that will extend not only through the markets but through a lot of geopolitical and global interaction and events over the coming years.
The Fed raised rates by 50 basis points this week. Where does this put us in the interest rate cycle?
The interest rate cycle, in particular the movement in 30-year bonds, which is what I watch the most closely, and also the 10-year notes, they continue to operate on this 4-year cycle, which was also the last peak in that cycle was in mid-2020 and was also the culmination of a 40-year cycle, so indicating a major multi-year top in bonds or low in interest rates. And a corresponding, or I should say competing, contrasting 4-year cycle has also timed recent lows and was expected to time a multi-month bottom in bonds in October of 2022, which was 4 years from the October 2018 low, and that is when bonds bottom. So even though we see the Fed continuing to hike short-term rates and expected to still hike rates further in 2023, the bond market and corresponding longer-term rates are showing that a major bottom is intact and that bonds will probably move higher on balance into late January, early February of next year, when we could see the first important peak in bonds or low in longer-term rates. And that could easily time out with one of the Fed's rate hikes and whatever foreshadowing or future expectations that they publish at that time. But I think that bonds are putting in a major major top, and actually, let me go again, a major bottom, and rates, the longer-term rates have put in a significant peak, and that looks ahead to the mid-2024 next cycle in bonds, when you could see a secondary bottom in longer-term interest rates and a secondary top in the bond market.
Are the war cycles heating up?
War cycles continue to unfold through this late 2021 through late 2025 time frame that I've written about for the last 8 to 10 years. And I think that the Russia-Ukraine conflict is just the first battle in those overall war cycles. As I mentioned a couple minutes ago, there are some uncanny Middle East war cycles, not just that 17-year cycle I was talking about, but there's a very consistent 11-year cycle, 25-year cycle, 50-year cycle, 100-year cycle, all that have to do with Middle East. And over the last 100 years, they focus particularly on Israel and her neighbors. That comes into play in 2023. So 2023, 2024 is a potentially volatile time, in my opinion, for the Middle East. And you also have things slowly and steadily developing with China and not only Taiwan, but the South China Sea, probably even more so than just Taiwan. I think that China is getting all their ducks in a row and preparing for more assertive moves in that region over the next 2 to 3 years. And I think one of the latest ducks in a row that they set up had to do with Xi Jinping's recent meeting with the Crown Saudi Prince and the agreement to be buying more Middle East oil, and just that one little caveat that oil be priced in the Chinese yuan, and China has just really escalated their petroleum exchange, and a few years ago had triggered and began their gold exchange. They're getting everything lined up so that when they do decide to make a global military move, they've got plenty of financial and economic ammunition in their storehouses that they know how they can use that to keep the West at bay.
Is gold in a seasonal cycle?
Absolutely. Gold has it completed what was probably a 2-year flat correction that I talked about from its August 2020 peak until its November 2022 low. That was pretty much a textbook flat correction, which is something where you see, if you were to draw parallel lines between the two most significant highs in that correction and the two most significant lows, they would pretty much be horizontal instead of downtrending or uptrending. So you had two peaks at almost the same point and then two lows at almost the same point, with the November lows being the most recent. And that ushered in what I think is the start of a new 6 to 12 month uptrend, particularly with silver leading this move this time. I've explained why I thought that silver would turn into the leader in September of 2022, and also detailed what the ramifications of that should be for 2023. I mean, it could be a very interesting time in precious metals, and my primary upside targets for these initial 1 to 2 month surges were at 1835 to 1845 in gold and at 2450 in silver, and we just hit those levels on December 13th, 14th, just as stock indexes were also fulfilling upside targets. So all those markets are setting the stage for quick, sharp sell-offs. But there is a strong chance that gold and silver, as long as they hold some key support levels in a imminent sell-off and do not turn a particular indicator that I watch closely negative, that they could be set up for another rally into the first week of January before a little bit more significant top takes hold. But there are some key levels to be watching in a sell-off that will give very strong indications as to what to expect leading into early January, and then leading into some more important cycles a little bit later in the first quarter of 2023.
Could cryptos be today's version of the dot-com boom and bust in 2000?
In many respects, yes. And probably the most telling or significant of those is that back in 2001, 2002, the dot-com bubble burst or bust didn't mean the end of the internet, didn't mean the end of tech stocks. It meant the end of that first phase when things got way too frothy and way too overblown. And it also meant the changing of the guard from what appeared to be the leaders and pioneers in the first leg up, and ultimately to more sustainable, more valid and solid entities, whether they be companies, whether they be an actual cryptocurrency in this part of the analogy, in the years that followed that bust. So I do think there's some strong similarities. Since late 2021, I've continued to write how I thought that the Bitcoin bubble was going to burst, and that it would closely parallel not only the dot-com bust, but the bust of Japanese stocks in the early 1990s, the dot-com bust in early 2000s, the sell-off, somewhat bust we saw in gold stocks and mining shares in the early 2010s, and now a bust in the early 2020s with Bitcoin. Each time, those markets that I just cited lost about 80% of their peak value. And I've explained why I thought that Bitcoin would ultimately drop down to around 14,000, which is where it would also lose 80% of its peak value before a major bottom would become more likely. And so, yes, there are many close similarities to the dot-com boom and bust. But like I said, that also just means that it's not the end of crypto or the end of many of those cryptocurrency, but is the transition into a probably longer lasting but not as accelerated or frothy move forward in the digital currency arena.
What do agriculture cycles see ahead for food shortages?
My work is showing that right now you've got, particularly in your grain markets, you've got another leg down, probably heading into the first quarter of next year. And if prices are going down, that usually means supply is sufficient to fulfill demand. So at least on a broad scale, not a food crisis of any sort. But cycles that come into play out over the next 1 to 2 years are helping to pinpoint where we could see another big surge in grain and agricultural prices, and probably a related food shortage, food crisis of some sort. But for right now, I think that even the inflationary aspect of the food markets has peaked, and that we're in corrective phases for the foreseeable future.
What's the latest on crude, gasoline, and natural gas?
All of the energy markets, but particularly crude and the products, natural gas tends to swing on significantly different cycles. But those other three fulfilled some multi-week, multi-month cycle highs in early November and have been in downtrends ever since then. That was when they set secondary highs and were expected to move into another leg down that I contend should last into the middle half of January. And that's when we see more significant cycles that are bottoming and should time a multi-month, probably multi-quarter low in crude oil and the products. I was looking for a quick, sharp rally into December, into mid-December, possibly stretching into the 23rd, and then a new sell-off taking hold at any time in that time frame. And that's just, like I said, just short-term cycles, and I'm more watching some daily trend indicators to hone that timing. But seeing the energy markets enter a new sell-off that should last into the middle half of January. Natural gas is a little bit different, but not that much. It was showing an early December low that should lead into an overall rally into December 22nd, 23rd. And then I expect to see a new sell-off in natural gas that could extend into some longer-term cycles that pinpoint when a bottom is most likely in 2023.
I think we touched on this earlier. Do you follow solar cycles and their impact on the economy?
Absolutely, and I think that they are often overlooked for their impact, and probably a lot of that is because it's not as specific and precise as you need for a lot of trading specifics, and so then it kind of gets just dismissed or ignored at a trader's own peril. I think that the solar cycles, particularly this go round, and I've done a series of articles since 2018, 2019, that explained why 2020 to 2024 would be a very volatile time where solar cycles are concerned. And I've repeatedly detailed why I think, and this is strictly from a cyclical basis, I'm not a scientist or meteorologist or cosmetologist, but I think that we have the greatest chance for a damaging solar storm in 2023, and that is linked to just an ongoing series of major solar storms that have occurred on different intervals, but all of those intervals are converging or colliding in 2023. One of the most consistent is closely linked to the 11.2-year sunspot cycle, and the most recent time frame, which didn't get much notice at all for obvious reasons, took place in 2012, and the sun had one of its biggest storms, and many scientists compared it to the 1859 Carrington event, which is the strongest solar storm in modern recorded history. So from what they could tell, this flare, the sunspot, the solar storm was of similar magnitude, but the Earth was spared because of about an 8 to 9 day difference in rotation. So when it went off the sun, it wasn't aimed at Earth, and so it went off into space. But had you had an 8 or 9 day difference, it was either earlier or later, had it occurred then, we'd be talking about much different consequences from that. And I think that, again, cyclically speaking, 2023 and even a couple of specific time frames within the coming year are, in my opinion, the highest probability for a major solar storm to disrupt some things on Earth.
Eric, where can people follow you and subscribe to Inside Track?
Once again, the best place to access a lot of our information and subscription details is at InsideTrackTrading.com. That's INSIIDE Track Trading. So the extra I in the middle of the inside. InsideTrackTrading.com.
Eric, thanks for being on This Week in Money, and best of the season.
Best of the season to you as well, Jim. Thank you.
My guest has been Eric Hadik, CEO and President of InsideTrackTrading.com. Coming up, Mark Leibovit, next on This Week in Money.
Introducing RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMY.ZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to This Week in Money, Mark.
Glad to be back, Jim. Thanks for having me.
Mark, do you have a special offer for our listeners?
We do, and I also want to make a disclaimer that I'm not a financial advisor, nor do I provide financial advice. I do produce our VRTrader.com Leibovit VR newsletters, and it's for educational purposes. We do, however, have a bunch of newsletters that we'd love you to subscribe to. We're offering 50% off using the promo code 2022 half off. And when you go to our website, VR Trader, that's Victor Robert, VRTrader.com. Actually, VR stands for Volume Reversal, which is my technical tool, which is trademarked and available on the Meseldzija.CEO platform for those of you who are technically oriented and want to see my volume signals. But that 2022 half off is the promo code for any of our newsletters, and thank you for mentioning it.
Does it look like the stock markets could see a Santa Claus rally, and when would a Santa Claus rally begin and end?
Well, you know, those that were watching Santa Claus's reindeer and sleigh were disappointed the last 3 days. We've had, mixed economic numbers. We had Jay Powell from the Federal Reserve squashing any belief that he's going to cut interest rates. You had a triple witching option expiration today. It might have been a quadruple witching. I have to just check my notes here where index futures for individual stocks are included. But you had the option expiration. And, of course, you've got Russia getting more aggressive in Ukraine. A lot of, negatives out there. And, we're just wondering where that Santa Claus rally is going to come from, what's going to prompt it. A lot of people talking about it. It's honestly more hoping and wishing on my point, on, their points. But, there's just a seasonal tendency for recovery. And the truth is you may have already seen the rally. Basically the market had been rallying, the last, couple of weeks on and off, and it just came off a little trading top a couple of days ago. So, but there is this seasonal tendency for a rally this time of year. And, if you're going to play it, you got to be in and out really quick, in my opinion. I think the market overall is in a downtrend and it's going a lot lower. But, I don't want to discount that because of just a couple negative news stories this past couple of days. They overdid it, and maybe next week they'll find some reason to rally the market.
What are the January barometer and the 5-day early warning system?
Okay, so I've been using these for years, and I don't want to take credit for them because I didn't create them, but they were created by Yale Hirsch, who authored in the early 1970s, and he's an old friend of mine. He must be in his late or mid-90s now, but he created the Stock Traders Almanac, and he created the 5-day and the whole month of January barometer rule, well, way back then. Of course, I have a little bit of a bias as well, even though they are good indicators, because it's funny you bring up the story, and we can take a lot of time with this one, but it was really the first book, if you want to call it a book, that I ever read on the stock market, and we're looking back in around early 1970s, and I think that he may have first published it back then, and I might have picked up the first couple editions of it, but I was in college. And what it is, it's like a calendar, and if you look at it, it's like a farmer's almanac type format where, these are the things that happen on these dates in years past. This is he came up with the like the turkey shoot, where the day before, the day after Thanksgiving, the market rallies, the Santa Claus rally that you would just refer to, tendencies, what stocks do in certain weeks and months of the year based on history, just very interesting stuff. I mean, it had nothing to do with specific stocks or predicting the market, but just, general things. And he may have come up with something that I use just all the time and for years. I don't want to take credit away from him. I'm not sure where I got it from. Maybe he didn't create it, but the concept of a turnaround Tuesday, for example, he may have had some comment in there about, acting in the market on Mondays because it would change direction on Tuesdays. So there are many instances where you have turnaround Tuesdays sometimes. Now everybody knows about it or talks about it. Maybe the change occurs late Monday versus on a Tuesday, but there's so many instances where market's up on Monday, down on Tuesday, or down on Monday, up on Tuesday, and just a lot of volatility about that. And you can rationalize all day long why people are acting differently on Mondays or Tuesdays. So he came up with stuff like that. So, there was the first book I read on the market. And then, in 1987, and I will get to your question, Jim. I know you asked me a different question, but the 1987 edition of the Stock Traders Almanac, he actually mentioned me and 3 other technicians in the, in the intro in the book. It was an attribution, I suppose, or acknowledgement. And he called me and 3 other technicians the new prognosticators. So think about it. Here I'm a young kid, in the 1970s, reading my first book on the stock market. Ultimately, I went to the Chicago Board Options Exchange in the late 70s and became a floor trader. But in 1987, he dedicates his Stock Traders Almanac and mentions my name and 3 other technicians as the new prognosticators. So obviously that was, a huge shot in the arm to me, thinking that maybe I was doing something right in the career choice that I had made. And I owe a great debt to Yale Hirsch for giving me that encouragement and also for creating a very valuable document. And I don't get any commission for this or anything, but I would encourage your listeners. His son, Jeff Hirsch, runs the company now, and you can look up Stock Traders Almanac. It's an interesting book, a little thing that comes out every year, and I think it's worth taking a look at. But he created the early warning system and the January barometer, and what it says is essentially is that as so goes the month of January, so goes the year. So if the S&P closes at a certain number, let's call it, 3,900 on December 31st, and by the end of January it's 3,800, you painted a negative picture for the entire year just based on the fact that the S&P was down during the month of January as compared to the close on December. He also fine-tuned that a little bit, and he calls it the early warning system. And it says the first 5 days of the year could give you a warning just as good as the whole month indicator, but if you get both of them, then you get a double whammy in terms of accuracy. So the first 5 days are down, again, compared to the close on December 31st. You can say we've set a negative tone for the year, because here it is, the new year, and people are coming in and they're just selling stocks, so they're obviously not too optimistic about the upcoming year. But conversely, if it's up strong, then money is being put to work for the new year. And, a lot of this has to do with taxation and so forth, why people would act at certain times versus others, but it also is a sentiment indicator. So you got the 5-day and the whole month to watch. And, they were both down this past year, and the market has been down for the year, So, of course, there's been a lot of zigs and zags and stuff along the way, but it's an interesting, you may call it an arcane indicator, like the Super Bowl indicator and all kinds of the hemline indicator about dresses being up or down during good and bad times for women. And there's a lot of interesting stuff. We used to post all those in our annual forecast model, and we may do so again this year, where we list all the various quote-unquote arcane indicators that predict the market. Some are good, some are bad, but the January barometer and the for the 5-day and for the month are pretty good, and he calls them the early warning system for the market.
The Fed raised the bank rate 50 basis points this week. What do you think 2023 holds for interest rates?
Well, it seems like they're still going to go higher, and, we get into a whole discussion here about the incompetency of the Federal Reserve, and the fact, in my belief, and growing among the belief in others, that it should be abolished. So we can spend a lot of time on that subject. There was a great book. Edward Griffin wrote a book several decades ago, The Creature from Jekyll Island, which I refer to often in these broadcasts. It's about 500 pages documenting the creation of the Federal Reserve, why it should be abolished. We know they've done a terrible job. They're doing a terrible job now, acting as aggressively they have when they could have acted differently. But they're not in a position to really change the economy or inflation, because their force is well beyond their control. We have an insane U.S. Congress and Senate, House and Senate, that pass bills that inflate the economy, spend money, pork barrel bonuses for districts, all kinds of fun stuff out there, and they just want to spend money. So you have one part of the government spending like a drunken sailor, and then you've got the Fed on the other hand, which is an independent agency. It's a private corporation, by the way, created by the federal government. It's actually not part of the federal government, but it was created by them. And they do their own thing, and if the Fed's trying to tighten things and Congress is spending money, if everybody's butting their heads, and you're not making any progress. So just on a philosophical level, it's all BS, and I mention this often in my broadcast here with you, and I don't do it to demean the Fed necessarily, though they deserve demeaning because of their incompetency, but we did see back in 2008, 2009, Bernanke, one of the former Fed chairs, actually stating that he believed that the Fed was partially, if not responsible, for the Great Depression because it had raised interest rates during the onset of the Great Depression. So they're obviously, economists don't know what the heck they're doing. We've seen, and you mentioned this yourself in a lot of your research, about how many recessions and so forth we've experienced as a result of the Fed. And they don't, we had Alan Greenspan back in the late 1980s, slamming on the brake and then hitting the accelerator back and forth with interest rates. You just wonder, what this is all about. So, we've known for decades, and it's just not my thought, that economists are probably the worst out there in predicting both the economy and the stock market. And they just really don't know what they're doing. They're reacting rather than being preemptive. And like I say, even if they were, if you got one part of the government doing one thing and another part doing another, then what the heck is that all about? But we have so many factors out there. I mean, you've got Russia, Ukraine, you've got commodity shortages, supply chain shortages, crises all over the world, geocosmic effects, volcanoes going off that could change climate and crops. I mean, there's so many things out there that the Fed and the governments have no control over, and the fact that they think they can drive inflation down or is not really in their power. And if they really think they're going to drive interest rates down to, or drive inflation down to 2%, which means raising the interest rates dramatically, like Paul Volcker did back in 1980, they're going to create a depression. I mean, this country, there's going to be some serious, fallback to this. I mean, you're just not going to raise rates from 4% to 18% or 20%, which is what Paul Volcker did 40 years ago, and not create a serious crisis in this country. And that doesn't necessarily accomplish the job. It may put the country into recession or depression. Does that really stop inflation? Does it stop shortages around the world? Does it stop the geocosmic? Does it stop crop shortages? Does it stop all kinds of shenanigans going on? And then you've got, diseases around the world. One day it's COVID coming back, and then it's another form of virus, and suddenly, people are getting sick and they can't go to work, and the economy is affected. I mean, China has been going through this here for weeks and weeks and weeks, shutting things down, opening things up, riots in China because of the COVID nonsense. So that affects supply chain, that affects inflation. Raising rates or lowering rates doesn't change any of that. So we're living in a fantasy world with the Federal Reserve, and I'm being long-winded here. So they may trim back a little bit, raising interest rates, but a lot of this is political. Does Jay Powell want to keep his job? We have a new Congress coming in next year. I mean, the Fed was created in 1913, and it could be abolished just as easily as it was created. Politically, maybe they want to keep their jobs, so maybe he won't raise rates as much, or be forced to, reduce rates when he says he won't do that. So there's so many variables out there. That we have war in Europe. We saw today in the news how Russia got more aggressive. We can spend a whole hour just discussing, what that's all about, because of, the predisposition to go after Putin for a lot of reasons. But how's that? What's really going to change here for the Fed? And I guess I've sort of answered your question. I think they say they're going to raise rates, but will politics drive them to change their course? Or there'll be another event. China takes over, attacks Taiwan, and there's a huge war in the Pacific. Or, Israel decides they got to take out Iran. How is the Fed going to react? They're going to lower and raise rates if there's war, or are they going to stay on the same course that they say they are? And it's just really an unpredictable environment, and we're dealing with unstable people in the government on both sides of the aisle and all sides of the government. And at the moment, they're telling us rates are going up. So I guess we survived in 1980, Jim. I mean, we went through 18-20%. I bought a house. I think I've told the story many times. I had to pay 11% interest because I couldn't get a loan at the bank back then. I got it from the seller of the property, who was willing to negotiate 11% at the time. So, the fact that rates are 4.5%, 5%, or even 6.5% now is still cheap to what I had to pay, 30, 40 years ago, even though we've seen them at zero prior to that. So I guess we'll just flow with the times, and, all this conversation we're having, it all comes down to people listening to the show, and they're saying, well, how do we benefit from this financially? Can we make money in these type of environments? And the answer is yes, because no matter what the volatility we've seen in the last 40 years, up or down, you could trade the market. And, you can make money as we have here, short the market and inverse ETFs, or if gold is rallying, play some gold, or, if cannabis stocks are going up, playing cannabis stocks. So there's the Bitcoin, both up and down. You can trade that. There's so much stuff going on out there, defense stocks, solar stocks, up and down, the market itself, as I just mentioned. So, the bottom line is, we can sit all day here. I can complain about the Federal Reserve and Congress and Putin and Iran, and unless they blow us all up and there's an atomic war, which I doubt will happen, but I guess anything is possible. Mankind seems to be destined to destroy itself, but hopefully I'm wrong in that. In any event, we could trade the market, and that's what this broadcast is really all about. I mean, how can we make money and survive in these environments? And no matter how bad the market or the economy is, there's opportunity out there, and we do have inverse ETFs. So if you're going to be a long-term investor, and they tell you to go buy the S&P and do nothing. That's one thing, but you can also buy an inverse S&P and take money off the table when things aren't doing so well. So as long as the financial market still exists, there's opportunity, and I think that's really the focus here. Is I could rant and rave all day about all kinds of subjects, but today, just personally, I made some money, trading a couple gold stocks, that are on our list. That red rally, for example. So the Dow was down 300 points, but I made money today. So did our clients that were following some of those ideas in the newsletter. And we were also short the market. Coming into today, we were in inverse position, and we were short the total stock market index. That's ticker symbol VTI. It's produced by Vanguard, the mutual fund company, but it is a ticker. You can trade it, and we made money when the market dropped today on that. So, I'm walking away smiling today, even though the news is bad and the market was down.
Even though the Fed only raised rates by 0.5%, is it likely to affect the mortgage and real estate markets?
Well, it has a little bit already. I know here in Phoenix and Arizona, they say those prices are down. Depends on what part of the state you're in, but you hear anywhere from 10 to 15% pullback in prices. It's all location. So people. There's more sellers now than there were before, people that are nervous. But, real estate runs in these so-called 20-year cycles, and they claim it doubles every 20 years. And, look at the big shakeout we had from 2008-9, for 10 years, and then the thing exploded and things went to incredibly high prices. So it's like the market. It's cyclical, and rates are a factor. But, there are some areas that people would rather be in than others. So I think, places like Arizona and Florida have held up a bit, I think, because of their location. But, there is still pressure because of financing issues and so forth. So, it has continued to be a negative here short term. And, a lot depends on what rates do here. I speculated a moment ago, what if Jay Powell decides to change his mind or is forced to politically, and suddenly rates start to come down? Well, the real estate market will suddenly explode really fast if that happens, So, reality is with higher rates, at least what we saw back 30, 40 years ago, it tends to put some pressure on real estate, and that's sort of what's happening right now. So, I guess the answer is yes until the factors out there change.
There's talk of inflation easing or declining. Is quantitative tightening needed for this to happen?
Some of the charts I've seen that, despite all the jawboning here about reining in inflation and so forth, the Fed really hasn't done much on the quantitative tightening that is supposedly one of their tools. Apparently, there's been minimal amount of that, though they're threatening to do more, and there has been some signs of it, but it hasn't been an overt aggressive act on their part. I know they've gotten a little more aggressive in the mortgage market in terms of their effect on that. And, I'm not a Fed analyst. I'm not sitting here going to quote you the tool they have and how they use it, but they have a lot of interesting tools out there they can play with, and including, which is not even talked about, we mentioned this before, their ability to go in there and buy bonds of companies, buy stocks of companies, buy all kinds of crazy things. We know in Japan, for example, their equivalent of the Federal Reserve pretty much controls the stock market there. And I read some numbers like they control 80% of the stocks in Japan, just the federal agency there. And I'm sure a lot of that's going on here too. And we have the old plunge protection team that Ronald Reagan signed into law back in 1988, and that allows the government to come in and buy the market and support the market or drive it up or down as they wish. So, the bottom line is there are a lot of tools out there, and the quantitative easing or tightening, we have to really, see, we get lagging indicators, lagging reports of what they really have done or not done. My personal opinion is, I think, considering all the criticism that the Fed's getting right now, I think they'd be less inclined to tighten things even more than raising the rates that they're already doing. But, we're dealing with a I hate to use the expression, insane people, but these people really don't know what they're doing. And we saw that the last couple of years in the last decade where they kept rates at 0% without anticipating anything possibly changing, that maybe they should change their stance. And then suddenly overnight they become aggressive and will completely reverse direction and do it in an historically aggressive manner, which they've just done. It doesn't sound like they're really very thoughtful in their strategies and approach. So I really don't know what they're going to do, but my gut feeling is whatever they do, it'll be the wrong thing.
Does it look like the U.S. dollar could be breaking its downtrend?
I'm still bullish on the dollar overall. It's been in a downtrend, correcting for a while, and commodity people like that because the weak dollar is good for commodity prices. It hasn't really helped crude oil, which has been pretty much in a correction the last several weeks, though I am still bullish on the oil for geopolitical reasons. But I think with the war going on in Europe, and looks like it's expanding, I think money tends to fly into the U.S., and that strengthens the dollar overall. So if we get more, of this aggressive action in Europe and around the world, I think, money flows into the dollar as a bastion of safety or strength. And I wouldn't discount the dollar is going to go down any great deal at all. That's my opinion. It has been ran up big, ran into a correction, but I don't think with what's going on in the world, I think people would rather be in the dollar than be anywhere else. So that's sort of my opinion.
Your thoughts on gold?
I think you have to own it just as a hedge. It's like saying, why would you own Bitcoin? Distrust of government, distrust of markets, distrust of currency. It's due for a move. The dollar has come down recently, which helps gold, but there are times where gold and the dollar don't necessarily go in inverse directions, which people are betting on. Sometimes they can track in the same direction. So, looking at it, we had a big double top formation in the last few years in that 2060, 2080 range, priced in U.S. dollars, and that sort of has held. And it looks like we're trying to work our way out of that. And the ultimate confirmation will be a breakout above those levels, the 2060, 2080 range. And when that occurs, that'll probably be your big buy signal for traders. And, the amount that gold came down off that high. So what we drop from roughly 2070 down to about 1670. So it's about $400 correction. On the breakout, there's a technical rule called a swing trade indication, and you can add that $400 to the breakout point. So I would say if we break out, you're looking around 2460. 2500 is probably your next big target when and if that occurs. And I'm not saying it's happening now. It may not happen now. It may take 10 years for it to happen, but that would be the reaction in the markets when and if it does occur. So, there's a lot of reasons to be distrustful of the government, the way they're handling budgets, the way the Federal Reserve is acting, the way Congress is acting, the way Europe, has been acting, with regard to negative interest rates for so long, just instability around the world. Gold's been around thousands of years. It seems to always hold its value. And unless there's some huge discoveries or we're mining it on asteroids and bringing it in and nobody knows about it, and there are a lot of articles about all the plentiful gold that is out there in the universe, but keeping things on a equal level here, normal markets, normal supply demand, I would say, having some is not a bad idea as a hedge, and we're long overdue for a rally, regardless of what the U.S. dollar does. So I'm more bullish than bearish, but we get more and more bullish if we break out above that high, because that means you get a nice dramatic move up there, which ultimately could lend to a move up to 3,000 over the next few years. So it's okay by me to have some and be long some. It's just a good hedge.
Your thoughts on silver?
Same thing. Silver's more of industrial and big in the solar complex, And there are other benefits to silver too, even on the health side of the equation. Silver was used by the pioneers when they crossed the frontier, last couple hundred years, where they would take silver coins and stick it in buckets of water, and the silver actually killed bacteria and I think viruses as well. So there's actually health benefits to silver, which are not really discussed that much, but there are silver products out there, and silver has, I say, medicinal as well as, practical applications in industry. So silver is behind. The problem with, I should have mentioned this a moment ago, the problem with both gold and silver has been, unfortunately, they've been manipulated by the government. And there's a lot of documentation to that. There's actually been lawsuits filed and been successful against some of the big banking institutions. I put these in my newsletter, but the place to go is GATA.org, GATA.org, and Bill Murphy over there has got 20 years of documentation regarding the manipulation of the silver and gold markets and its government, the leasing of the gold, suppression of prices using the futures exchange, the COMEX, where they would sell contracts with no physical backing behind it just to depress prices. And you'd ask yourself, why would you do that? Why would that happen? Well, there's vested interest in keeping the prices down, either for industrial reasons or government doesn't want it to go up because it discredits the government. If gold is soaring, then it makes it appear the government doesn't know what it's doing, and the currency is not worth, we know it's not worth the paper it's printed on anyway, because there's no backing for it, just a full faith and credit supposedly of the government. But if gold's taking off, it diminishes that factor, so that there's reason to suspect that the work that GATA has done documenting the suppression of the prices is real. So the question is that going to come off and change? And if it does, then there's sky's the limit for gold and silver, because we know they have been depressed, and it's been documented. So very interesting play here, how all this is going to work out. You would think and hope that the free markets take charge, Jim, and it's a really free markets. That's one of the reasons I'm against the Federal Reserve. I think you shouldn't have a central bank manipulating rates. The free market should make decisions. Let the bond market, let traders, let investors make a decision where rates should be. And I think you'd have a fairer economy and market as a result of that, not based on some government, suppression or acceleration process that apparently has been accepted for over the last 100 years, which really has created more problems than benefit.
What's happening with energy shortages and the energy markets?
It's tough to say. There's a lot of push to free things up because we know we have a government that is, insane regarding suppression of crude oil and, canceling pipelines and doing whatever they can to discourage the production of a product which is needed worldwide for a lot of reasons besides, cars and so forth and transportation. So, I think there's an increasing demand for it. The more the government tries to suppress it over time, the higher the price is going to go. And particularly we have a war accelerating around the world. The world is still crude oil based. It's still energy based on natural gas, crude oil. It's not run on solar power or wind power. There is some nuclear around, but not enough to supply all the energy. Coal is another example of a product which is now being used more because we realized we didn't have other sources for energy, so we jumped back to coal again. But my bottom line feeling is we're in a bull market in oil, and the more the government sticks its nose into it, the higher the price is ultimately going to go. We did have a correction here, and it wouldn't surprise me if it was a manipulated move. Just as I mentioned with the COMEX and with regard to oil, gold and silver, there are futures contracts. It is possible. If you have enough money behind you, you could hit the bids on the crude oil contracts, drive the prices down, even though you don't have the crude oil behind the contract. You have money behind you, and that could be the U.S. government as an example, and drive the prices down for manipulative reasons, but not a reflection of reality. So I think crude oil is going to be $150 to $200 a barrel the next few years, if not higher. That's sort of where I'm headed. I think the realization of the need and the inability to produce what we need, and we're gonna pay the piper for it. So I would hold it. I would hold names like Occidental Petroleum, which Warren Buffett owns, and I would just sit back. I think there are other plays as well that pay high dividends, but I'm a bull on oil. I know it's had a correction, but I'm not a bear at all. I think the reality of the market says it's going to go up.
How disruptive could food shortages by design be to the economy and daily life?
Oh my goodness. We have starving people around the world. We already have food shortages in various locations now. I think that's one of the areas that I'm also bullish in terms of the ETFs and the commodity markets, agricultural commodity ETFs, corn, wheat, soybeans, and so forth. Absolutely. These are in bull markets, and I think we're going to see more crop shortages. We've seen a lot of problems with regard to fertilizer shortages. The world has to eat. A lot of this is a function of geocosmic as well. We got one of these super volcanoes going off. Maybe we don't even need that. We have 47 active volcanoes on the planet right now that are polluting the atmosphere, blocking the sunlight. Of course, you could say we could grow everything indoors, but that's not going to happen so fast. I know they're doing that with marijuana because you can make a lot of money with that, but there are the limitations of indoor growing. So I think, we're going to see more and more of it. Obviously, war creates supply disruptions and so forth. So we're long and strongly favor the commodities and the grains.
What's the latest on the battery metals sector?
They've gone a bit of a correction. Some of the big names in lithium have pulled back, and I think they got overdone. Everybody got all excited about it. All the ads on TV are buying electric vehicles. It's nice. They're nice toys. The problem is you can't always charge them where you want to, when you want to. And we have bigger problems in terms of the ability of utilities to provide the energy and in enough locations to make it practical right now. I think it's a multi-decade process. It's not going to happen. We don't have enough electricity. If everybody had an EV today to power and charge all these vehicles, we're going to probably need more nuclear plants and so forth. Of course, they came out with that story about the fusion breakthrough, which I think is a bunch of nonsense. I'm sure it's been around a long time. They're just trying to, wet our chops, and then the story will disappear. But that's a whole other discussion. I have that in my newsletter as well. But the EV problem is that, for example, I just checked out some EV locations, and you go to some of these places, and the lines are long. It takes forever to charge your car. It's nice just going to the gas station, putting some gas in, and getting in and out until the technology is developed to the point that you could instantly recharge your car or do it in very short order, assuming you can get in line to do it. And then if you want to take a road trip for more than 300 miles, where are you going to charge your car unless you're in a hybrid vehicle that takes both gas and EV? So you have to sort of balance it out in terms of your risk and getting fuel when you need it. So there's so many variables here. The market has pulled back a lot because the lithium stocks really got carried away and thinking that this is the answer to the world and it's all going to be solved immediately, which is not the case. So bottom line is it's a fun toy. It's not totally practical because of the distance limitations, the charging location limitations, the time it takes to charge. So it's a compliment until they figure it all out. My recommendation is get a car that uses electricity and gas, so at least you got yourself protected. But ultimately, we're going to do like Back in the Future, that movie from the 1980s. You're going to have a fusion or fission device in your car. Maybe it's based on more nuclear type stuff. Maybe it's solar related, so you can generate perpetual energy without having to worry about charging or getting gas. So science and technology will move us into I think a whole different direction in time because EV is not the solution. Like for all the reasons that I mentioned, it sounds good, but where's all the power going to come from? And what are the limitations in having it? So I'm just being realistic. I mean, I'd be a very nervous owner of an EV vehicle the way I live. I mean, I can take off and want to drive 2 hours up to Flagstaff, Arizona and take a trip. Well, I'm not going to be able to charge along the way. I'm going to get stuck on the road. And how do I know if I find a place, if I can get there and the line isn't 10 hours long, and whether it's even working? And some of these charging stations I've been observing this a little bit. It takes hours to charge your car. I mean, it's so impractical. I mean, it's really crazy. So I'm not a big believer in it, and I think it's going to take more time till the problems both on the energy creation side and the practicality of using it are solved.
Do you think the crypto crash is comparable to the .com bust in 2000?
I think it's a little different because, and this is personal opinion. I mean, maybe I'm dead wrong. I mean, the .com was really a lot of hot air completely in terms of these companies, and the crypto is a whole different animal. I mean, the whole idea of Bitcoin or Ethereum and so forth is because you don't trust government, you don't trust currencies, you want to store value, you want privacy. It's a completely different discussion. I think, there's every reason to distrust the government. Currencies have come down in value. They're inept in what they're doing. They want to pry more and more into your personal life, like this talk about creating a digital currency here in the U.S., where overnight suddenly all your bank accounts money is now automatically converted to a digital currency so the government can monitor or even cut off your ability to use your own money. I mean, the whole crypto world was created because of distrust of government, and there's every reason to be distrustful. So, this shakeout that we've seen here is part and parcel, I just think, to a normal correction. We've seen a lot of volatility in the market. I'm not saying all the cryptos are going to survive. You got the FTX scandal, which could be bad news at the bottom. They shake everybody out, but I don't think the crypto digital world is disappearing overnight. In fact, I recommended Bitcoin here in my newsletter. I think, the amount that's dropped from almost 70,000 down to 15,000. I mean, this is the time to take a look at it if you're speculating and you want to own some crypto. I mean, we've already seen a couple big up and down waves in the Bitcoin since around from the 2010 area forward, since it started trading. So it's just a normal volatile market, and that's what's happened. And a lot of it is news driven. And now the news, this expression, buy them when they're down, sell them when they're up, buy low, sell high. So I'm attracted to the Bitcoin at these prices compared to where it's been. I'm not saying that this is the bottom. It could take 2 or 3 years for it to go back up to where it was or even near where it was. Your question about comparing the .com to this, I think it's completely different. The .com, a lot of these companies disappeared, and they were for reasons basically based on their inability to earn money, and they were just speculations completely. And you could say, well, crypto is speculation, but it's not. You're not in crypto for that reason. And you also got to keep in mind there are companies that still accept crypto as a form of compensation for their goods and services. So when industry is willing to accept a Bitcoin or so forth for payment for goods or services, then it becomes a viable alternate currency. So that's sort of where I'm at.
What sectors do you like as we head into the new year?
Okay, well, I would take, the main thing is being short the market. I have to say that up front. I think that we're still in a bear market. I think we're going to going back down through the 2020 lows, the March 2020 lows, which would drive the S&P down anywhere from 30 to 40% lower than where it is now. So, I'm not a buyer generally of stocks. I'm more of a trader of stocks. All I hear on the financial media, well, these stocks look good, or this looks good, and you should look at this. And yes, they are good for trades and so forth. But, when big names like a Disney are way down in the cellar, or names like Apple are way down, or even, the names like Facebook have been decimated, it's still a bear market. So we shouldn't be looking, honestly, if you were my best friend and you said, what should I do with my money? I would say go buy U.S. Treasury bills. There's zero risk. You could get, 4.5% interest. Maybe you'll get 5 or 6% by the time the Fed is done at zero risk, and go to sleep at night until the bear market is over. If you're more aggressive, I think you should be overall short the market, be an inverse ETF. We've had a rally here from the lows that we saw back in June and October, and there's every reason to believe that we're going to make new lows. So why not be in an inverse ETF position? But if you want some individual areas, sure, gold, silver is tradable. There might be some opportunity there and so forth. I don't think solar is done yet. It had a big run up, so you can take a look on some solar stocks on a pullback. I don't know if they're going to turn around cannabis or not. There was a lot of discussion regarding legislation here in the U.S., which has been pending for a long time. Of course, it depends on how much demand there really is for cannabis and CBD and so forth. But all these stocks are beaten into the cellar, and they're really cheap. So any good news could turn this sector around, I suppose. So those are sort of areas that I would I would look at. I'm sure there's others that I've missed, but just about any stock that's down or any sector is tradable. You get these rallies like we saw here in the last few weeks. And they're all tradable in terms of if you're a speculator or you're an investor. We trade some stuff, so it really doesn't make a difference to me if it's a bear or bull market. But if you're asking overall strategy, you have to assume a bear market and to be defensive and, being in risk-free securities like a treasury bill or equivalent would make sense to me. And if you want to trade some gold and silver and you want to trade some of the big name stocks, we're going to get our normal swings, So we'll see if we can get that Santa Claus rally that you asked about, going again here next week or into New Year, and if that some news triggers it and it's tradable, I'll be all over it in terms of a trading opportunity, but I think it's a bear market bounce.
Your thoughts on new Twitter owner Elon Musk, who has booted journalists off the platform who wrote stories about him?
I love Elon Musk. I think he's the Edison of our time. He's a genius beyond geniuses, the wealthiest man in the world. He's proven just about everybody wrong. Who else is planning a trip to Mars and creating rocket ships to do it? Not to mention all his other enterprises. He's a hero to conservatives like myself because of what's happened in the media. I come from a journalist background. I have a degree in broadcast journalism, which I never really used, though I went on to business, stock market afterwards. I've never seen so many liars and non-journalists in the world holding themselves out as being journalists in the media. They don't tell the truth. They hide the truth. They don't broadcast stories that are out there. You have to look for alternate media to do it. And the fact that even Facebook and Twitter were involved in government suppression of news, and the fact that they already admitted that the FBI was involved with them. This is not journalism. This is sedition, in terms of the status of your country. So Elon Musk has done a terrific job. He took a great personal risk. I hope he's personally got a lot of bodyguards around him. I'm sure he's made a lot of enemies. I would not have had the courage that he had to do what he did, because you put yourself in the spotlight as being a conservative, a free thinker, and the forces out there don't want that to happen. They want control of the planet. You got the World Economic Federation with Klaus Schwab out there and the one world government, and you've got all this nonsense going on in the world, everything from woke beliefs to all the sexual changes for children nonsense, taking down statues, discrediting religion. So, the whole story of the news being suppressed and having a free voice out there is fantastic. And, Elon has done a terrific job in trying to change that. I hope he's successful and hope, God protects him.
Is climate change the big push now by the globalists?
It has been for a while, Jim. This is how they try to they control us. The global, the global warming is all, nonsense. It's a economic move to try to profit by, in the 1970s, it was global cooling, if you remember. They were afraid we were going to freeze to death. Now it's, 40 years later, it's now global warming. The planet goes through changes. It's gone that way for millions of years as far as we can document. Nothing to do with mankind being on the planet. There could be, polar shifts, volcanic activity, earthquakes. I mean, not asteroids. I mean, so many things that meteorites just changes the planet. The planet's a living organism on a certain level. I mean, there's so much going on that changes here, and we're just insects here crawling along the surface, thinking we have any great impact. So it's just a bunch of hogwash. The whole global warming. Yes, you should try to control pollution. You don't want to pollute the waters and the air, and do what you can to control stuff as best you can. Absolutely, but it's just a manipulation to control the populace and to benefit financially by doing it in terms of credits or economic credits. For whatever they call them. I forgot already. My mind went blank. So you got high-powered people flying around in jet planes, polluting the atmosphere, and then they proclaim that we should be conserving energy and we shouldn't be doing any of the things that they're doing. It's okay when you have a lot of money, and it's okay for the populace not to do it. So it's just a bunch of nonsense. Unfortunately, they got so many people brainwashed regarding it. It's really incredible. But the science says that global warming is nonsense. The science is behind that, and the few that are pro that, I think, are just paid-off stooges. That's my opinion.
Are the deep state globalists being exposed more and more every day?
I think so. Partially to efforts that we make on this broadcast and more you're hearing. If you had mentioned Klaus Schwab and the World Economic Forum a couple of years ago, no one would know what the heck you're talking about. Now you're starting to see it see it in the news. Particularly when Trudeau studied with him apparently at one point, and he's making, he appears at all these economic conferences and so forth. So there's more talk about, of course, not only Klaus Schwab, it's George Soros and that whole group out there that's trying to control the politics and the economics of the world. But the bottom line is, the whole movement, is control-based, economic-based, and it's not where we want to go. So I think it's going to fail. I think people want their freedom. They want to make their own decisions economically and politically, and we're starting to see that with, hopefully with Elon Musk's move now, and the fact that we're seeing more conservative people coming into power. So I'm hoping that that disappears. But when you have this, I get into trouble with all this stuff. But this woke movement, look what it did to the Disney stock, for example. These people are literally insane out there trying to change culture, religion, and so forth. The masses are not going to stand for this. It's going to end up either violence, a revolution, or something in the worst case. Hopefully that doesn't occur. But I think free speech and openness of all these discussions is going to hopefully change it. The problem is we have people that are just brainwashed. It starts in the colleges. I saw this with my own kids. You got nutty professors there, people that are just so left and so Marxist in their beliefs that the system is bad and you have to destroy it and take it down. Yeah, that's great. Yeah, but meanwhile, who pays these people? It is the capitalistic system and so forth. So we have a generation of brainwashed kids and people out there in the media. The problem is they're not hearing the truth, Jim. When CNBC, NBC, CBS, MSNBC, CNN all lie and don't tell the truth. And now finally we have someone with Twitter and Elon Musk maybe trying to release the truth. How is the truth going to come out? So if the media was honest, I think none of these movements, these crazy movements, would be underway and be as successful as they have been up to this point. But I think we're starting to lose ground, Jim, and praying that continues to be the case. And whatever I could do to stop it, I will on these broadcasts or in my newsletter or in my presentations, because we have to stand up for what's right. And tearing down statues, trying to change the U.S. Constitution, trying to change the government. It's essentially revolution, and, if that's where the populace wants to go, they're going to pay a big price for it.
Do you think the economic destruction was planned by the globalists alongside a herd-thinning plan so they can pick up assets for pennies on the dollar?
I would discount it. I can't prove that, but what's the expression? Follow the dollar. There's money to be made. They'll pull any stunt they can, and that may be one of them. So the global warming is part of that same concept, and anywhere you see money to be made, that's the risk. And I don't have a lot of documentation here, and I'm just going to be ranting and raving, but there's no question about the control freaks out there trying to control us. COVID was an extraordinary example of how government, uses any opportunity it can to control the population. So, I just think it's a question of realization that this is happening. And if you're well informed and you don't rely on the conventional media as the average person does, or take the time to do your own research, you can really realize what's happening. So, I'm very much an independent, conservative thinker about this stuff. So anyway, I think people listening to this broadcast want to know how they make money from all this.
Is it looking like Arizona could be the epicenter of election fraud?
Well, that's what Kari Lake is saying here, the governor wannabe who didn't make the election here, but apparently the current governor-elect was somehow involved in the election process, and there's all these articles out here locally, and I suspect with people like George Soros and others spending a lot of money here in Arizona trying to turn it into a Democrat state versus a Republican state, it wouldn't surprise me if there was shenanigans along the way. I get myself in trouble here, charging people with crimes that you can't prove, so I just think you've got a lot of criminal activity in this area, and as soon as you start saying that they're not it's not authentic to elections, you're considered eccentric or wrong. And I think we made a comment off air, it's like when the Democrats lose, then it's fraud. When the Republicans win, when the Republicans win, it's fraud. When the Democrats win, it's okay. So, we know there's a vested interest against the conservative movement and all the things we've cited on this broadcast about changing the culture and the economy and in the direction of more socialism and Marxism and woke and so forth is all, being sponsored by people who have, destructive interests at heart, not positive interests. So, I wouldn't be surprised at all if there was some false ballots, some miscounting, something going on here. Because, this is a conservative state, Arizona. It's been a Republican conservative state going all the way back to Barry Goldwater for decades, and suddenly it turns into a Democratic state. It's a forcible effort on those that have power and money to do this. They're bringing people in. They're bringing people in that for intentional reasons to change the populace, change the registration of who is here. So it's an effort. It's a concerted effort is what I'm trying to say, to change it here. And I think that they pull any there's no stops that are not pulled to try to make that change. So it wouldn't surprise me. I can just see it, I'm just living here and seeing what's going on. So it's not accidental that suddenly it becomes a Democratic state. So it's a form of manipulation here. And the people who generally live in this part of the world are conservative people. And, I think that, it probably was a false election, but, I can't prove it.
What's happening with geocosmic events?
Oh my goodness. We can spend hours on this subject. We had some solar, activity, just in the last 24 hours or so. There's an article that, came out. Let's see here. We've had increasing solar activity. There was, in fact, today, there was a solar flare. NOAA forecasters say there's 75% chance of what they call M1 flares and 15% chance of X flares in the next couple of days. And apparently there's 11 numbered sunspot groups that are crossing the face of the sun that could create more of this activity. When you talk about this stuff, people say, oh, it's a bunch of nonsense. Well, it's not, because it affects shortwave radio. It affects our satellites and so forth. And we had the Carrington event back in the 19th century that fried the telegraph system back then. So there's increasing solar activity, and it is a risk. And it's like anything else, meteorite, asteroid, volcano, you can sit here all day, talk about it. It doesn't make any change in your life. But, there are effects on us that you may not feel or see immediately. And, we know there's cosmic rays really penetrating our bodies every day and minute, but we don't really notice it. So we are affected by what's going on out there, not to mention the effect of the moon in terms of the gravity and the times of the year that the planet is in certain positions. In fact, we're coming up to the winter solstice here in a few days, the 21st, 22nd of the month. And, I track this, pretty carefully here, and it's not discussed at all in the media. But, we had the vernal equinox back in March and the June summer solstice, which occurred within, 3 days of the market low. So the question is, well, where's the winter solstice, 21st, 22nd? Did it define a market top that we saw here in the last couple of days? Because usually it's a week or two either direction of these planetary positions, or are we going to rally into the end of the year, and that'll be a confirmation. So you got to watch the equinoxes and the solstice in very general terms, but we've seen sometimes within a week or two they absolutely define important cyclical change points in the markets and in other areas. Of course, we've got today, the 16th, we've got the third quarter lunar cycle. And we also had the options expiration today, which I mentioned at the top of the broadcast. So, there's some volatility today on the third quarter position of the moon. We got the new moon coming up December 23rd, which overlaps the winter solstice. So it should be interesting what we see there. And these are just generally planetary discussions about forces out there that, people don't really talk or recognize that could, affect the markets. But, we try to watch those. And, of course, keep a track on all the volcanic activity out there. As I mentioned earlier, we got 47 volcanoes now in eruption state on the planet. We got Mauna Loa out in Hawaii, which is a huge story. I mean, that thing came to life. That's the biggest volcano and actually the biggest mountain on Earth. Hopefully it doesn't expand in terms of its impact, but, that's a big story. And outside of that, there's all the tangential areas we can get into, but I think the most important thing is where we're going to be on this winter solstice, where we're going to be on the new moon on the 23rd, and see how it overlaps the current markets. But, where I stand on the current markets, I just think maybe bounce, but overall bear cycle still very much in force. So, and I think it's going to get a lot worse than people realize.
Do geocosmic events give any hints to the ongoing argument, is the world flat or round?
I don't even want to get into that one. That's absolutely crazy. I know there are those that we know very well that believe that. There's no way that I could possibly accept that thinking. We don't live in the days of Christopher Columbus, and not only that, we know that centuries before Columbus came to the New World, we had Vikings and all kinds of other Scandinavian people traveling to the New World, to the North American continent, and we have photographs from space. Listen, we came from Mars, probably according to some theorists, and left it in destruction, and now we're trying to go back to our home planet. No question about the Earth being around. Even the thought of it being flat doesn't even make any sense at all. I probably angered somebody right now when I said that, but that's my belief.
Mark, where can people find out more about your special offer and sign up for your services?
Yeah, go to vrtrader.com. As you can see, we cover a lot of stuff. I've been doing this for decades, and looking at the charts, looking at the economic news, watching financial television, or reading the papers didn't make me money. You had to go other places. You had to find out what market cycles you're in, what the position of the planet was in. You had to learn about the lunar cycles and the seasons. You had to learn about government manipulation in the markets. You had to learn about a lot of stuff, not just sitting there listening to some advisor or television personality telling you to buy or sell the markets. And that's why we're still survivors here and still doing this after all these years. There's much more to the markets than just looking at some balance sheet from some company or what some politician tells you about the state of the economy of the world. Meanwhile, you go to vrtrader.com. That's Victor Robert, and you'll see everything from stock market commentary to geocosmic activity there, all with the idea of trying to tie it all together into a way that we could be successful in the markets.
Mark, thank you so much for being on This Week in Money.
Thanks for listening to a long tirade, Jim. Appreciate doing it.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was speaking to us from Arizona. Our conversation took place on Friday, December 16th. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Eric Hadik, and Mark Leibovit. And thank you for listening. Questions for the show or our guests can be sent to info@HoweStreet.com. Now stand by for a company showcase update from RecycLiCo CEO Zarko Meseldzija. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. My guest is Zarko Meseldzija. He's Chief Executive Officer of RecycLiCo. Welcome back to the show, Zarko.
Thanks for having me, Jim.
Zarko, you've been one of the world's busiest people zipping around the planet, telling people about all the great things that RecycLiCo has accomplished this year.
Yeah, exactly. It's been pretty much full steam ahead going into the end of the year, and it was great to be able to travel and visit these different facilities, especially in Europe, as a refreshing change from being in meeting rooms all the time. But I was also really impressed by that proactive approach of battery recycling that you see in Europe. There's this mentality shift where it seems like producers are really interested in recycling their own waste and recovering value, which aligns with our business model of technology integration, right? And especially the legislation in Europe also supports this agenda with requirements for recovery efficiency and minimum percentage of recyclable materials in new battery cells. So overall, it was a successful trip, and I'm really glad to be back in the office. Just kind of looking back, even with this latest press release, looking back at all the success that we've had throughout the year. I think the last press release we just had this week really reviews our 2022 highlights, and I think it's a great resource for both old and new listeners to really just go out and read. It serves as a good reminder for all of our achievements this year and our commitment to transparency. I just really want to emphasize that I think we've really been transparent throughout the development of this whole project. And I think one of the major highlights really of the year has been the success of the demonstration plant project. It's included the successful scale up and trial tests that demonstrate our technology leadership and expertise in battery recycling. So just really happy with where that's all come. And on top of the technology, our innovation has also been recognized with the growth of our patent portfolio, just the novelty of that process, right, including granted patents in China, Canada, and most recently Australia. And it's just a good reminder that when this patent is being reviewed by the patent office, that there can't be any kind of prior art that conflicts with this. So a great achievement on our end there, just continuing to build our technology moat. And I've also, I guess, the latest press releases raised a lot of questions. I have received a lot of questions about the MOUs and NDAs we've signed. And I just want to assure everyone that we always will remain transparent about our process and the work that the company is doing in its technology development. However, I also want to protect the integrity and the trust I've built with others. And, we have mentioned we are collaborating with companies on testing and evaluating our process, but these details remain confidential. And I wouldn't say, we have gone quiet with our updates, but instead I see it as a new phase of our growth, which is really focused on building these long-term relationships that, happen to, remain under the radar and confidential. But this work around the technology is happening. And, we do continue to do work on the demonstration plant, but I say, recently we did shift a lot of our resources over to focusing on actually getting a very large sample out of material ready for a potential partner. And it was on a quite tight timeline. So, I would say, we want to make sure we do everything we do is right. And, I gotta say there's never a dull moment with testing and samples, always on the go, and just kind of shifting and managing the resources we have for this. Anything that really goes out our door is going to be a top-end product. And, finally, just as, wrap things up from all of us at the office, I just want to wish listeners a happy holiday season. We're all really excited for the new year. And it does go without saying that, Larry Ray, the founder of this company, will always be missed. And, hope to speak with you more, Jim, in the new year.
Zarko, can you tell people where you're traded and how to get more information about RecycLiCo?
Yeah, we're traded on the TSXV under the ticker symbol AMY, on the OTCQB under AMY.V, and the Frankfurt Stock Exchange under ID4. You can check out all the information on our website, www.RecycLiCo.com. That's constantly being updated, so you'll see our latest video, technology page, all of our press releases and contact information. So please feel free to reach out to us if you have any other questions.
Zarko, thank you so much for the update.
Thanks.
My guest has been Zarko Meseldzija, Chief Executive Officer of RecycLiCo. I'm Jim Goddard. Our conversation took place on December 16th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.